Federal officials had been working around the clock to try to find some resolution in the wake of the collapse of Silicon Valley Bank. And tonight, the Treasury Department, FDIC, and Federal Reserve all releasing a statement saying that all depositors with money at Silicon Valley Bank will be made whole. That includes the depositors who previously their deposits only up to $250,000 had been insured. Additionally, they also announced that a second bank, Signature Bank, has also been closed. I want to read you a bit of this statement, which said that after consultation with the FDIC, the Federal Reserve, and also President Biden, quote, Secretary Yellen approved actions enabling the FDIC to complete its resolution of Silicon Valley Bank, Santa Clara, California, in a manner that fully protects all depositors. Depositors will have access to all of their money starting Monday, March 13th. No losses associated with the resolution of Silicon Valley Bank will be borne by the taxpayer. The statement goes on to say that they are extending the same protections to those depositors with money at Signature Bank, which is based in New York. And additionally, they said that shareholders and certain unsecured debt holders will not be protected, nor will be senior management at this company. Now, this comes as they had really been trying to seek this resolution to the issues that depositors are facing in the wake of the closing of Silicon Valley Bank. About 90% of depositors had money over $250,000, which was the previous limit that the FDIC insured, leaving many questioning what exactly they would do and how payroll would be met heading into this week. Now, we are still waiting to get some more specifics from the Treasury Department and other regulators here in Washington, but it comes at a time as they had been working very closely on this matter, trying to prevent any further jitters that it could cause for the banking system and the U.S. economy. I will note in this statement, they also try to stress the resilience of the banking system in this moment, in part based on those protections that were, or regulations that were put in place after the financial crisis in 2008.
All right, Arlette, thank you very much. And CNN economics and political commentator Catherine Rampell is back with us. Catherine, your reaction to this statement, I'm just looking at what this joint statement that came out from the Treasury Secretary, the Federal Reserve Chair, and the FDIC chairman. It also mentions, as Arlette was saying, Signature Bank. And so at the close of business on Friday, we had heard about Silicon Valley Bank. Now we're hearing about a second bank. That is obviously going to cause some concern that some of this is spreading and that this is becoming a larger issue.
Yes, there were a number of banks that saw their stock prices tank on Friday as a result of concerns about Silicon Valley Bank. You know, people were worried, well, if it happened there, maybe it can happen here as well. I've also heard lots of reports about people pulling their money out of a range of other kind of comparable mid to large size regional banks that didn't necessarily exhibit any signs of stress prior to all of this. It's this sort of contagion, this financial panic contagion, and which is why precisely why the administration and the Federal Reserve were keen on making sure that they stopped the panic here before it spread to other financial institutions. And I think that's what they're hoping happened here, that the depositors at Silicon Valley Bank and at Signature Bank are being told that they will be made whole. There apparently wasn't a buyer for Silicon Valley Bank, despite the request for bids, or at least nothing that's been announced so far. But the FDIC, in conjunction with the Federal Reserve and the Treasury Secretary, apparently determined that there would be what's called a systemic risk exception, and that they would make sure that the government essentially would make sure that those who had deposits at Silicon Valley Bank would be made whole. Normally, again, the FDIC only insures deposits up to $250,000. That was not the case. Of many of the deposits, many of the accounts at this bank far exceeded that level. So the idea here is to calm that concern, calm the concern of any depositors at comparable banks, so that that sort of panic doesn't feed on itself. That's the goal here.
Right. And Catherine, just a quick follow-up. We're looking at what it looks like we're going to be seeing on Wall Street tomorrow morning. The Dow futures, NASDAQ futures, S&P 500 futures, they don't appear to be spooked at this point, but we know that there are jitters and concerns that some of this may, I think Maxine Waters was using the word contagion earlier when we were talking to her earlier on in this hour, that this may lead to more fear and loathing on Wall Street. But at this point, we're not really seeing that at this point.
Well, I think the hope was that in some sense the feds would step in, whether that meant finding another buyer, whether that meant relaxing access to the Fed's lending window, which they also did, or whether that meant stepping in and essentially having the government guarantee that all of the deposits at these couple of banks would be fully accessible tomorrow in their entirety, not just weeks from now up to $250,000 or after all of this was sorted out, et cetera. That's why there was a lot of concern. So now that the government has stepped in and tried to provide a resolution, that may be calming some of those jitters. I don't know if it'll be sufficient. Because they've only announced it for these two banks. The question is, how do investors, how do depositors extrapolate to other banks? Do they say, aha, if the FDIC and Treasury and the Fed were willing to stop the panic, stop the bleeding at this one bank, will they do it at my bank as well? And we don't know yet how that will be interpreted. I'm sure I'll be looking, as others will, at markets tomorrow and at behavior at these financial institutions tomorrow.
Absolutely. If folks start lining up at the bank, that might be a sign of where things might be heading. All right, Catherine Rampell, thank you so much. We appreciate it.